Let's be honest. Most people don't end up with the wrong life insurance because they're irresponsible. They end up with the wrong life insurance because nobody ever sat them down and explained it in plain language. They hear a few buzzwords, see a price, pick something, and hope it works out. Today, we're going to take the confusion out of it. We're going to make term life and whole life make sense, and by the end of this episode, you'll know how to choose what actually fits your life. Welcome back to Wiseside Life and Legacy, the show that helps you protect what matters and build what lasts. I'm Nakel Nikiema, founder of Wiseside Financial and Insurance Solutions. Each week, we talk about real-life decisions that affect your family's stability, your ability to build wealth, and your peace of mind. And today's topic is one of the biggest forks in the road when it comes to protecting your household. Because choosing the right type of life insurance isn't just a paperwork decision. It can affect how much you pay, how long you're covered, what happens to your family if something happens to you, and even how you plan for the long run. So let's get into it. Term life versus whole life, what they are, who they're for, and how to know what you actually need. When someone asks me, Nakel, what's the best life insurance? I get why they're asking. They want a simple answer. They want me to tell them, pick this one. It's the best. But the truth is, the best policy is the one that protects your family the way you need. Not the policy your coworker bought. Not the policy your employer throws in as a benefit. Not the one with the loudest commercial. The right policy depends on your responsibilities, your goals, and how long you need protection. And that's why understanding the difference between term and whole life is so important. If you don't know the difference, you're basically shopping with your eyes closed. You might still buy something, but you won't really know if it's right until life tests it. So let's start with the simplest one. Term life insurance. Term life is straightforward. It works like this: you choose a length of time, like 10 years, 20 years, maybe 30. You pay a monthly premium. And if you pass away during that term, your loved ones receive a death benefit, the payout. That's the deal. And the reason term life is so popular is because, for most people, it's the most affordable way to get a large amount of coverage. You can usually get a high death benefit for a relatively low monthly cost, especially if you're younger and healthy. That makes term life a great fit for a lot of real-life situations. If you're a young parent and your kids depend on your income, term life can replace income. If you just bought a home and you've got a big mortgage, term life can protect the house. If you have student loans or other debts that would fall on your partner, term life creates a safety net. Term exists to cover the years when your financial responsibilities are at their highest. Think about it. Most people have a season of life where money pressure is heavy. You're building your career, you're building a family, you're building assets, and at the same time you're stacking bills and obligations. That's what term life was designed for, that responsibility-heavy season. Now here's the part people often miss. Term life is temporary. It's right there in the name. It's for a term. So what happens if you outlive the term? The coverage ends. Some term policies have options to renew, and some policies have options to convert into a permanent policy. But the basic concept is the same. The original deal was protection for a set period of time. And I want to slow down here because this is where people get surprised. They'll say, wait, you mean after 20 years, it's just done? Yes, that's the concept. If the term ends and you're still living, that policy has completed its job. And that's not a scam. That's how term is built. It's like renting coverage for the years you need the most protection. The key is knowing that ahead of time so you're not caught off guard later, wondering why you don't have coverage when you're older, or why the new cost is higher, or why your health makes it harder to qualify for a new policy. Term is powerful, but it has an expiration date. Alright, now let's talk about the other side of the term versus whole conversation. Whole life insurance. Whole life is permanent coverage. That means it's designed to last your entire life, as long as you keep paying your premium. So instead of saying, I'm covered for 20 years, whole life says, I'm covered for life. And that's the first reason some people choose it. They don't want the policy to run out. They want something that stays in place whether they live to 55, 75, or 95. The second big difference is something you've probably heard about, but maybe no one explained clearly. Cash value. Whole life policies build cash value over time. And here's a simple way to think about it. Imagine your policy has two parts. One part is the insurance protection, the death benefit. The other part is a built-in savings-like component that grows gradually. That cash value can be used in different ways. Depending on the policy, you may be able to borrow against it. You can potentially use it for an emergency. You can use it for an opportunity. Some people even use it as a support tool later in life. Now, I want to be very clear. That doesn't mean it's a stock investment. It's not a get-rich plan. It's a financial tool with guarantees built into it. It's designed for stability, protection, and long-term planning. And because whole life offers lifetime coverage and builds cash value, it costs more than term. That's not a mystery either. You're paying for two things term doesn't have: coverage that doesn't expire, and a cash value feature that grows over time. So if term is big coverage for a lower cost during a set time, whole life is permanent coverage with built-in long-term value. So how do we compare them in a way that actually helps you make a decision? Let's do it in real-world terms. Term life is usually lower cost, higher coverage for the dollars you spend. Temporary, no cash value. Excellent for income replacement and protecting large responsibilities like mortgages and raising kids. Whole life is usually higher cost. Permanent, meaning it can last your lifetime. It builds cash value. It can be used as part of legacy planning. It's often used for final expenses, wealth transfer, and guaranteed long-term protection. So the right question isn't which one is better. The better question is, what job do I need life insurance to do in my life? Do you need a big shield for the next 20 years while your kids grow up and the mortgage gets paid down? Or do you need something permanent, guaranteed, that stays with you and can help you leave something behind? Or, and this is the part most people are never told clearly, do you need both? Because here's one of the biggest truths in this conversation. You don't always have to choose term or whole life. A lot of families do best with a combination. Think of it like building layers of protection. You might use term life for the years where you need high coverage, like replacing income, protecting the house, and covering major debts. And you might use whole life for the things you want covered no matter when you pass away, like final expenses, leaving a guaranteed legacy, or creating a permanent financial cushion. This is sometimes called layering. And it's one of the smartest strategies because it matches the type of protection to the type of need. Temporary needs get temporary coverage. Permanent needs get permanent coverage. When you do it that way, you're not overpaying for everything to be permanent, and you're not underprotecting yourself by making everything temporary. You're building a plan instead of buying a product. Let me bring this to life with a real story, because this is where it clicks for most people. I had a client once who came in with a very common request. He said, "I just want the cheapest policy you have." And I understood what he meant. He wanted protection, but he didn't want to feel like he was throwing money away. He wanted to be responsible, but he also had a budget. So instead of arguing with him, I asked him a different question. I said, "What do you want this policy to accomplish?" And as we talked, the real goals came out. He wanted to make sure his kids had a cushion if something happened to him. He wanted to make sure final expenses wouldn't become a burden. He wanted to leave something behind, even if he lived a long life. Now, if we only followed his first request, cheapest policy, we would have ended up with a term policy, maybe with a shorter term, and that would have checked the box for affordability. But it wouldn't have covered those long-term goals. So we built a plan that matched what he actually wanted. We added a term policy with a larger death benefit to protect his family during the years they needed the most income protection. And then we added a smaller whole life policy designed for permanent protection, final expenses, and legacy. When he saw it laid out that way, he said, "This is the first time life insurance actually makes sense." And that's the whole point of this episode. When you understand the purpose behind each type, you stop guessing. So now let's make this practical for you. If you've been listening and thinking, okay, but what do I choose? Here are some simple guideposts. You might lean toward term life if you want the most coverage for the lowest monthly cost. You have young children depending on your income. You've got a mortgage or you just bought a home. You're early or mid-career and your earning power is still growing. You have a clear window of time where you know the risk is highest and you want strong protection during that period. In other words, you're trying to protect a season. You might lean toward whole life if you want coverage that doesn't expire. You want something that creates long-term stability, not just temporary coverage. You care about leaving a guaranteed legacy. You want to build cash value that you can potentially access later. You know you want final expenses covered regardless of when you pass. In other words, you're trying to protect outcomes that will exist for life. And you might consider a combination of both if you want the affordability and high coverage of term for your big responsibilities. But you also want a permanent foundation that stays in place. You want a strategy, not a one-size-fits-all pick. Because for many people, the truth is they need different types of coverage for different goals. Now, I want to address something that trips people up. A lot of shoppers start with the wrong question. They start with, what's the cheapest? Or, what did my friend get? Or, my job gives me something, so I'm probably fine, right? But the question that leads to a smart decision is this: what do I want this policy to do for my family? Do you want it to replace income? Do you want it to pay off the house? Do you want it to create options for your spouse? Do you want it to fund childcare, college, or simply keep the lights on? Do you want it to make sure nobody has to fundraise for a funeral? Do you want it to leave a legacy that changes your family story? When you're clear about the job the insurance needs to do, choosing between term and whole life becomes much easier, because coverage should follow your goals. Your goals should not be forced to fit a random policy. Let's do a quick mental exercise. If you passed away tomorrow, what would your family need immediately? Would they need income replacement to cover monthly bills? Would they need to keep the home? Would they need to pay off debts? Would they need childcare support? Now fast forward. If you lived a long life and passed away decades from now, what would you want to be true then? Would you want final expenses fully covered? Would you want to leave something behind? Would you want to protect your family from having to make financial decisions under stress? Those two timelines matter. And they're exactly why, for some households, layering term and whole life creates the strongest plan. One part handles the right now risk. The other part handles the no matter when certainty. Before we close, here's one more important note. If you already have a policy, that doesn't automatically mean you're done. It might be perfect, or it might be outdated. Life changes. People get married. They have kids. They buy homes. They start businesses. They care for aging parents. And sometimes people have coverage, but it's not connected to their current life. So it's worth reviewing what you have and asking, does this still match my goals? If it's term, do I know when it ends? If it's through work, what happens if I leave that job? If it's permanent, do I understand how the cash value works and what I can realistically use it for? Clarity doesn't just come from buying insurance. It comes from understanding it. So here's your practical takeaway for today. Before you choose any policy or before you change what you have, write down one sentence. I want this life insurance to do what for my family? Be specific. Not, I want to be covered. Covered for what? For how long? For who? And once you can answer that, term and whole life stop being confusing labels and start becoming tools you can use intentionally. If you want help sorting through your options based on your life, your goals, and your budget, you can visit wiseasidefinancial.com or reach out directly. My goal is simple: to help you make wise decisions for the people you love, and to make sure your coverage matches your real plan, not just a random guess. Thank you for spending this time with me on Wise Side Life and Legacy. Remember, protecting your future starts with clarity, and clarity starts with understanding your options. Stay wise, stay covered, and stay committed to what matters most.